have the recent slumps in stock markets basically been an overreaction? And clearly, now that we've seen and heard what the Fed's going to do, are any dips, especially in the US market, a buying opportunity?
I think so. If you look at the US economy, its fundamentals are very strong at the moment. The consolidation we've seen in equity markets around the world over the last few months have been a reaction to the very uneven and ugly economic growth that we are seeing. But as a whole, the global economy is still growing, and there's a lot of liquidity out there. So for us, that's to still suggest that having an overweight to risk assets is warranted at the moment. Certainly, there's some rebound off the idea that bad news is good news for markets, and that slowdown will mean that we'll have looser monetary policy for longer. However, I don't think that markets should get too ahead of themselves. We will see rate rises from the US, from England in the coming year, and I think markets need to adjust that. While they may be pushed back a little bit, they still are coming. We will still see higher interest rates.
So you like US equities. Europe's a different picture, however, given the weak data we've seen recently. How concerned are you about Europe, and what do you think Draghi's going to say today?
I think Draghi will reinforce his message he gave at his recent press conference, given they're so close together. He's put in place quite a strong pipeline of measures to stimulate economic growth in the Eurozone, whether it's the TLTROs, the asset-backed security program, the covered bond program. And it's going to take time for these to feed through into the real economy, for the measures to actually be evaluated to see if they're working. Now, I know the market wants him to talk about quantitative easing. They want him to put a figure on the size of that stimulus package, but I think he will refrain from doing so until those initial measures really can be actually evaluated. That first pickup in the TLTRO by banks was quite limited. The next one will come in December. That will probably be more of a bellwether about whether these measures are going to actually work.
And Bank of England, of course, today as well. No change expected there. Our poll shows the first rate hike in Q1. When do you see the first rate hike?
I think it'll definitely be at the start of next year. We're looking for around about February when the inflation report comes out. Now, there was an expectation that it might happen earlier, as early as December of this year, but given that inflation is a bit lower, given that we're seeing virtually no real wage growth in the UK economy, and the concerns the Bank of England will have about the slowdown in the Eurozone, because it is our major trading partner, that they will be looking to defer a bit. But I do think, again, those rate hikes will come in the early part of next year, because the Bank of England knows they need to get on the path to normalising monetary policy. They're very concerned about the impact it's going to have on households, it will have on the mortgage market, and they know they need to introduce it earlier and start moving rates up in a gradual manner so businesses and households have time to adjust, rather than waiting and doing it later and being forced to raise rates at a much faster pace. They'd rather go for earlier and slower.